Everyone, welcome to Public Talks. This is the very first public theme-based virtual event series in partnership with Voices of Wall Street. I am your host, Hope King from Voices of Wall Street. Thank you guys so much for being here on a very, very busy Tuesday. So to kick things off, we're dialing in on cloud computing and software as a service. And that makes sense for us in this series because if you think about it and how we're living in the aftermath of 2020, the push to remote work means tons of growth in this sector to accommodate all of the additional Zooming, virtual collaborating, media streaming, of course, too. So for this year, we're looking at companies expecting to spend about $305 billion on cloud services around the world, and that is up from $258 billion last year, an 18% growth, according to Gartner. So what does that mean for you as potential investors, as people who might be curious about the sector as a whole? Well, tonight we're going to answer that question with the help of two experts, Amy Konary from software enterprise company Zuora and Rishi Jaluria from financial services firm D.A. Davidson. Plus, given the news with Amazon, we're going to talk about that as well. So definitely stay tuned toward the end. The way that tonight will run, which is going to be about 45 minutes, we'll chat with both Amy and Rishi about where the SaaS industry is going, where it is now, and we'll talk about that for about 10 minutes each with each of our guests. We'll look at the companies, the stocks at the center of the trend, and then we'll also have a little roundtable at the end before we do Q&A with the audience. So if you do have some questions, put them in the chat, send them to us. We'll get them to the speakers as well. Before we dive in, for those of you who are new to the community, what is Public? Public is an investing-based social network where you can buy any stock for any amount of money and you can share ideas within a community of investors. Public combines the ease of fractional investing with an educational community that makes it possible to learn and build your confidence. Now, in the app, you can share the why behind your investments and also ask questions from other investors in the community. Public, it's backed by Tony Hawk, Will Smith, the Chainsmokers, Sophia Amoruso, Scott Galloway, and some of the original investors in Venmo. You can sign up with this special link that we sent to the chat here to download the app, and you'll actually receive $50 in free stock when your account is approved, so you can start investing today. And Voices of Wall Street, we are a video-first financial media company focused on stock news, industry trends, and insights from the sharpest minds on Wall Street and in business. So we are super excited today to be partnering with Public here, and let's get started. Our first speaker is Amy Konary, Zuora's VP of Customer Business Innovation. Amy has nearly 20 years of experience advising companies on subscription business strategies. She's also the founder and chair of the Subscribed Institute at Zuora, a think tank for the subscription economy. Amy, it's so great to see you. Thank you so much for being here.
Thanks so much for having me. I'm excited to be here.
So for those who just need a bit of a primer, a refresher on software as a service, SaaS, what is it? What is cloud computing?
Yeah, so software as a service is actually I've been part of software as a service for the last 20 or so years and actually defined it back in the late 90s. And so I almost want to launch into my definition from IDC back in the day. But essentially, it's the ability to provide computing services over a network to many customers. The old days, right? You take a CD, you install it on a computer at home. And today, we're all connected. So there's no need to locally install software. In fact, companies can provide it across the network. Customers subscribe, which is where subscription and subscription economy comes in. And from the customer perspective, you get ongoing value. You get the latest and greatest software. From the provider perspective, you have the ability to serve many customers in a personalized way over the cloud.
So you've really seen the changes. I mean, you coined basically the terminology as well. Before we get into sort of the history and where we are too and where we're going, what about Zuora? For those who don't know about what the company does, how does this power the subscription economy as well?
Yeah, so Zora is an enterprise software company that provides a cloud. So we are a software as a service company, a cloud-based platform for businesses that are looking to launch and manage their subscription-based offerings. Many software as a service companies use Zora's platform for that. And we help them do everything from take the initial order all the way through recognizing the revenue associated with subscription services. Basically, if you boil it down, we help companies make money from their digital initiatives. I mentioned software as a service. We also work with media companies, manufacturing companies. That as a service acronym is being applied to everything from fertilizer to trucks to mobility. So it's quite a pervasive trend to try to servicify your business with a digital component. And so our goal as a company is to help companies make money from doing that.
And what are some of the examples of your work? You mentioned even fertilizer companies. Why are fertilizer companies going to the cloud?
The essence about the cloud and these as a service offerings, it isn't about the technology. It isn't even about the financial difference of paying over time versus paying upfront for something. It's really about customer centricity and outcomes. Every business today wants to connect and build closer and endearing relationships with their customers. And so these as a service models allowed companies to, rather than selling a product or a thing, delivering a customer-centric outcome. It's a lot of buzzwords, but I'll give you an example that kind of bring it home. If you think of Caterpillar or CAT, it's a company that sells really big earth mover trucks, huge trucks. If I'm a construction site, I might want to own a truck and buy a truck, but at the end of the day, the outcome that I'm trying to drive is I need to move dirt from one place to another, or I need to build a structure. And so what companies like CAT are doing are thinking about earth moving as a service. What my customers really need is to achieve or to get a job done. And so there's an opportunity with digital services, with platforms like Zora's that can help you monetize these digital services to start selling the outcomes that products deliver in different ways to customers. And that's really the essence of what happened in the software industry early on and what we see happening in many other industries today.
And with the pandemic now, and again, as I mentioned, in the aftermath of everything that happened last year, this distributed workforce, all of our behaviors moving more online, how have you seen this really change the subscription economy?
So at the Subscribe Institute, which is the think tank that you mentioned, we have been measuring the impact of the pandemic on an index of roughly 1,000 subscription companies who we work with. And what we've found is that the subscription companies in our index grew 6 times faster than the S&P 500 over the first 6 months of the year. We also, while the S&P saw sales contract, we actually saw the companies in our index expand at a rate of 12%. And just to be clear, we're not just measuring the companies that are doing really well. This is an index of all subscription companies. And there's some companies that were impacted. Maybe they were in travel and hospitality, or they were in businesses where they required people to go in physical space. So it's a mix of a lot of different companies. And we saw this whole population grow. So there's a lot of resiliency built into the subscription economy. Some of that has to do with the longer term contracts that you might enter into. If you're subscribing to something, you might have an annual contract. It's less susceptible to maybe short-term impacts. Another big reason for the resiliency is that subscription companies are at their heart, in part because of the digital components as well. They're very flexible. And so we saw companies using a lot of agility, whether it was in the way that they priced or in how they moved their services. Maybe they shifted from in-person to digital really quickly. And of course, we all know that there were a lot of as a service platforms that became much more pervasive in our lives over the last 6 to 12 months, like Zoom as an example, right, that we're all kind of talking on today.
I love this word that you used, agility. And I wonder if most of these companies were agile enough to adapt quickly last year, or if there were some, challenges, a little bit more of a lag time that they would have liked, and maybe how you see that either being resolved or having been resolved already.
Yeah, absolutely. So a lot of the challenges to agility are, some might be from an automation perspective. Do we have the right technology in place that'll allow us to really shift quickly shift from selling one way to selling to another. But a lot of the agility is in sort of process and culture. Am I a culture of a company that's adaptable and can move fast? And I think we all in our lives experienced a lot of the companies that we work with innovating and making some rapid shifts to stay relevant, but not every company, was able to make that shift. And so I think there is definitely, the numbers show that inherent in the subscription model is some of this resilience, the ability to do things like allow people to pause their subscriptions where maybe they couldn't go to the gym or they couldn't travel, with the hopes that all of those things would resume again. And we found that, for example, companies doing that, seems a little counterintuitive that stopping a subscription would actually lead to a good outcome, but we found that it saves typically 1 in 6 churns, just having that agility and that ability to do that. So having the right systems in place, having the right processes in place, and then having a culture of agility are all really important. And look, it's not just in the last 12 months that we saw a lot of change. I think we all expect moving forward that dynamicism is going to be the name of the game for all kinds of businesses. And so having that ability to be agile, to iterate, and to adapt is going to become table stakes for companies in the future as well.
And it's really business continuity. I mean, if you have all of these established.
Absolutely. And I think what a lot of companies are doing as well is thinking about how do we, let's say if we don't have a digital service today, or we're not participating in subscription economy today, where are parts of our business where we can start to experiment with that? So we see a lot of companies starting to maybe add connected services that complement the core product or service that they have, or even thinking about how do they disrupt themselves first before a competitor can come in and do the disrupting for them. So we're seeing a lot of innovation happening across industries as companies are really trying to figure out how to inject some of this capability for continuity's sake, and also to kind of protect and preserve the IP that they have for years to come.
All right, Amy, amazing stuff. We're going to come back to you in a second. We're going to talk to Rishi next. Amy Konary is VP of Customer Business Innovation at Zora, and we're going to have a roundtable with her and Rishi after we do a one-on-one with him, and then we'll have Q&A after the roundtable as well. Rishi Jaluria is Senior Research Analyst at D.A. Davidson. He covers stocks in the software sector, and his coverage includes Zoom, DocuSign, Dropbox, Twilio, Cloudera, and much more. Rishi, great to have you with us.
Thank you for having me.
So we just talked to Amy about sort of specific things that companies are doing. You have much more of a broader view of the industry, what's happening, what's really growing inside of software as a service. So I want to ask from your perspective as an analyst, what is it that is driving this growth? I mean, cloud is a big term. So what are the things, what are the services specifically inside of cloud that is driving this growth overall?
Yeah, the way that I've thought about it is, and this is a very common line of thinking that you'll hear, is the pandemic has really accelerated pre-existing trends. And, we think about the fact that already workforces were becoming a little bit more remote, a lot more distributed, and that's been obviously massively accelerated with everyone working from home. And really, if we look at what categories of software have seen the biggest benefit from the pandemic, it's number one, solutions that enable remote collaboration, Zoom, DocuSign, to a certain extent, Slack, obviously Microsoft with their Teams business. But then it's also this category of software that's digital transformation. Anything that is enabling businesses to be more digital, to be more cloud enabled or cloud native, those are all doing really well. You think about Microsoft again, you think about ServiceNow, you think about Twilio, Pegasystems. And you hear these really great stats from Satya Nadella talking about how they saw 2 years worth of digital transformation in 2 months. Twilio talked about years of digital communications being accelerated in the matter of months. Migration to the cloud, same thing. And that's really what we're seeing is those tailwinds have just been massively accelerated. And I think the market opportunity has grown tremendously as a result.
There are a lot of folks in the audience who are looking at some investment opportunities potentially for themselves if it's right for them. What should they be looking for? I mean, just because you are, let's say, branded as a cloud-based platform or, that you provide these services, I mean, are all of these companies created equal? How do you measure which ones are better investment opportunities than others?
Yeah, the way I think about it, and without going straight into individual stock picks, is I like to look at companies that are more mission critical in nature, right? That you see businesses increasingly depend on, because those are the ones that tend to have the lowest amount of churn, that are the stickiest, right? You think about database software, you think about vertical, you think even about some of these big cloud platforms like AWS and Microsoft Azure. They're incredibly sticky and incredibly mission critical. And so I tend to favor things that go that way. I also think companies that invest heavily in innovation are really important. I know we talk about that a lot, but as you alluded to, not all SaaS companies are created equally, right? SaaS as really a category has existed for more than 20 years, right? Salesforce was founded in the last century, not in this century. And obviously they've been able to maintain innovation, but a lot of SaaS companies have lost that edge. And you see even cloud to cloud disruption where SaaS companies get a little bit fat and lazy and allow new players to come into this space and do really well. And so I look at companies, some of the ones that I've mentioned, like like Twilio, I look at Zoom, I look at Atlassian. I think these are phenomenal companies that have the ability to compound their growth for the next 5-10 years. And valuation aside, I tend to favor those types of companies versus those that I think are maybe ripe for disruption from the next generation of cloud vendors.
I love that you said that. I love it because Amy, in our last chat, mentioned how many of these companies that are now either moving their businesses, transitioning, as you mentioned as well, online, or they're even launching their own cloud-based services themselves. This has become now a norm. And you also mentioned the term cutting edge. So what is it that makes a company in this environment now cutting edge in the SaaS space?
I think it's a couple things. Number one that I think really strikes out is the developer appeal, right? Developers are kind of king in tech buying decisions, and that's changed a lot over the past 20 years, right? Gone are the days where a CIO would say, "All right, we're going all in and buying everything from Oracle or SAP." And instead, developers have more and more say. In fact, if you look at the stats out there, I think nearly 80% of developers are either a primary decision maker or influential in IT buying decisions. So, having solutions that are easy to buy, easy to deploy, easy to build on top of, and very flexible are really important, right? And that's where you see, all across the board, not just the developer friendly companies that we think about like Twilio and Fastly, but even in the database space, for example, right? The last thing a developer wants to do is get on the phone and talk to an Oracle sales representative. They'd rather go online and just download MongoDB or download Couchbase or Cockroach Labs and play with it for themselves and start to iterate on that. And the scalability and flexibility they get with them that you would not get with an Oracle. And really that I think is number one in what makes you cutting edge. I think the second thing is more of a quantitative thing, right? How much are the software companies themselves investing in R&D? And that's something that, as a public analyst, who's someone looking at publicly traded stocks, I look very closely at, right? Companies that start to take their foot off the brake on R&D investment, those are the ones that I think lend themselves to being disrupted down the line. Whereas those that, again, I point to Twilio, I point to Atlassian, those that aggressively invest in R&D are more likely to be on the, stay on the cutting edge side of things.
I want to talk about the first point, the developer point. And I like it because, for those who don't think about developers as human beings, I mean, they're people. They're people who are actually building these apps. They're, if you make an analogy to the manufacturing sector, I mean, they are the builders of the internet and they enable these services to work. So, if you're looking at developers who are using Twilio to connect into Uber, I mean, that's what enables, folks to call their Uber driver or their delivery, person that are coming in. I mean, these are the connective tissues. And they're an important audience for these companies to satisfy because they potentially will become frustrated or they might really like certain platforms. So is that kind of what you're getting at, is like you need to really, as a SaaS company, be very accommodative to what they need really to build successfully?
That's exactly it. And I think you hit on a very important point. There's that feedback loop is really important, right? Not just having, hey, we have tools that developers can build on, but listening to them and saying, what is the feedback they're giving? What are things they want? Do they want different programming interfaces? Do they want the ability to better natively integrate with other tools that they use out there? And absolutely that's very important because, at the end of the day, if I'm a large company, I think about the fact there's still, even with the pandemic, there is a scarcity of developers. They're very expensive to hire. And you think about the fact that people coming straight out of top engineering schools like Cal or MIT are earning six figures in their first job. Any solution I can buy that makes their job more productive or makes their job easier, it's a no-brainer. And so I'm very easily going to say, okay, this makes your life easier. It allows me to get more productivity out of that developer. I'm going to buy it. Not even a question.
And it's great that we have you on the panel tonight as well, because, for investors who are looking at these companies, I mean, they've got to do kind of what you do, maybe at the same level, obviously, but they're looking for these similar headlines, or they're looking at maybe how many developers recently has Zoom hired or Twilio, and that gives you an indication of the investment back into the company.
Yeah, absolutely. I mean, I look very closely at that, and developer hiring. I look at developer activity online, and there's ways to track this and say what platforms are developers using. Even going and looking at developer forums on places like Stack Overflow and Reddit, and how that sentiment changes over time. What do they like using? What do they find really fulfills what they're trying to do, and which ones do they start to have issues with? I think that can be, for public investors, a very important leading indicator.
Now, the other point that you mentioned in terms of how companies can be more cutting edge is, really kind of on this cost, I think, basis. If I am paraphrasing you correctly, and I think about that because many times, because this has become such a pervasive no-brainer at this point for companies who are transitioning or who might be launching their own a version of their own services online. It comes down to sometimes cost and how much cheaper somebody can offer their services versus somebody else, because at the end of the day it's almost a commodity at this point. If we take AWS for example, you can run your app on AWS. If Google Cloud is going to undercut them by cost, I mean, what are the trade-offs there? How do you measure how these companies are trying to compete on cost?
Yeah, and I think you hit on an important point when we talk about pricing as it relates specifically to the cloud platforms, and one kind of important point, right? When we talk about cloud, there's all the different layers, right? There's the software, the application layer, that's SaaS. There's the platform as a service. There's infrastructure as a service. So in this case, when we're talking specifically on the infrastructure layer, your AWS, GCP, Azure, absolutely, price is a really important consideration, and all three of them are willing to undercut each other on pricing because they know that the real money is to be made up the stack, right? The margins for Amazon on things like Redshift or DynamoDB are much higher than they are on the core storage and compute layer, right? And look, I mean, both Amazon and Google reported earnings today, and if you drill down into the numbers, it's pretty fascinating. AWS, right, obviously the largest in the space, the AWS division is incredibly profitable. It's nearly 30% operating margin business. Google, for the first time today, actually broke out their Google Cloud division, not just in revenue, but in profitability. And just to make sure it's a fair comparison, Google Cloud also includes what we used to call the G Suite, right? Google Workspace, all the spreadsheet and collaboration apps in that bucket. So it's not 100% comparable to AWS, but that's a negative 30% margin business for Google. And that disparity, I think, is really striking. And that speaks a lot to how much Google is relying on pricing right now as a way to get more enterprise business in the door. And look, for a lot of customers, it's not an either or. And I'm seeing this more and more often. Actually, we just did a CIO survey last week, and I think about 2/3 of CIOs that I talked to are multi-cloud. So they're using some combination of AWS, Azure, and GCP. And literally by going, AWS to AWS and Azure, that's an instant 30% off bill for your cloud infrastructure. And so more and more companies are going to do that because they recognize that there's a lot of cost savings to be had there.
That's a great point. And we are lucky today. I mean, we didn't prepare to go into the numbers of these companies, their earnings, because it would be a good exercise for those who are watching to be able to understand how to use that information to their benefit when they're thinking about their investments. But to your point, this is not a winner take all. So the fact that companies are choosing and they're sort of going to this buffet of cloud services also goes to show where maybe some of these companies are strong in one area in the stack and not. And also, just really quickly before we get to the roundtable, if if you could explain to the folks kind of what a stack is, right? I think it's really important to kind of lay out what that means, you know, a sandwich analogy, however you want to kind of explain it. I think it's important for folks to know just how complex inside of SaaS these services, individual services can be.
Yeah, absolutely. And so just to go into the difference between SaaS, PaaS, and IaaS, that's infrastructure as a service. I always love to, every time I get a new person on my team, use pizza as an analogy, right? And so your traditional software where you used to deploy it in your own data center and you know, use CD-ROMs and all that stuff, that would be like making your own pizza at home. Infrastructure as a service, that's when we talk about AWS, Azure, that's your equivalent of like a take and bake pizza, right? Where the actual raw ingredients to the pizza are provided by someone else. You still have to provide the oven, the gas, you know, the setting to eat it at, you know, your dining table. That's kind of the IaaS. If you go to PaaS, that's the platform as a service. That's like pizza delivery, right? So you know you get the fully finished product delivered to you. The only thing you have to do is have the actual space to eat it at and whatever beverage you want to have alongside that. And then lastly, there's SaaS. And that's dining out, which, you know, I'm sure all of us miss after not being able to do this for a year now. But that's where everything is provided to you, right? The actual food, completely cooked, final product delivered to you, and the setting and all the accompaniments with it. So that's how you go from your traditional on-premise all the way up to SaaS, if that's helpful.
It is absolutely helpful. I think people can relate to food pretty easily. So I love that analogy. All right, I want to bring Amy back now and have a bit of a roundtable with both of you. And I want to start with the news today. Amazon CEO Jeff Bezos stepping down later this year as head of the company, still kind of staying on as part of the board, but more importantly, Amazon promoting the head of their cloud business now as their number one. This reminds me of Microsoft's move to promote Satya Nadella to CEO. He was head of Microsoft's cloud business. I would love to get your reactions to the news today. Amy, we'll start with you on the news that Jeff Bezos will be stepping down later this year and that they will be promoting their number one cloud guy to run all of Amazon.
Absolutely. So as you indicated in kind of the explanation, it's on trend, right? For what we've seen for other large, you know, really large iconic companies. And I think the cloud experience that Andrew Jassy brings to the table is, you know, absolutely key in the future of a company like Amazon. So obviously we'll be analyzing and thinking about this news in the hours and days to come, and what does it mean for Jeff Bezos, and was it, but I think for the cloud, for cloud computing specifically, I think it absolutely validates that, you know, not only is this a computing paradigm that's important, and that is the way that businesses and people, you know, want to access computing resources, but also, you know, the way that I think of it, I liked your food analogy, Rishi, but it's not just about the computing, it's about how you combine all of these elements to deliver value to a customer. And so I think that the ability to do that in a computing sense translates into the physical sense as well, because it's about putting combinations of services and products together for customers.
I want to ask both of you about the bundling as well. But Rishi, I want to get your reaction first to the news, and then let's talk about the bundling of services and really maximizing that for these customers.
Yeah. So look, I think it was a big surprise to all of us to see that happen. I think we expected it at some point, just given, you know, where Bezos has you know, his arms, right? It's not just Amazon. There's the foundation. There's you know, the space exploration. There's the Washington Post. But you know, I think this is absolutely speaking increasingly to how important AWS is becoming for the Amazon business. And in fact, if you go back a couple of years, there was a point at which AWS is only profitable part of the entire Amazon organization and really funding the retail engine. So, you know, putting Andy Jassy, who's been a phenomenal leader in charge of the entire business, it's something that we've seen not just Satya Nadella, you know, but IBM's trying to replicate that move with promoting Arvind Krishnan to CEO. You know, I kind of liken this move actually to Google, right, and putting Sundar Pichai in charge of the entire organization, and the founders kind of taking a back seat, because it is, and it's kind of crazy for us to be on the outside and think of hey, the part of the business that's less than 10% of revenue is somehow maybe the number one or number two most important part of a company that did $125 billion in revenue this quarter, which is unbelievable. It really speaks to just the fact, I mean, there's this saying that we always quote, the Andreessen Horowitz quote, software is eating the world. And I think this is absolutely indicative of that.
Still relevant, that quote, decades on. Since you cover this so closely as well, can you speak to Andy Jassy's strengths? What do we know about him? And what are we expecting now from Amazon with him in charge? What changes can we expect from the company?
Yeah, look, I think given my time following Andy Jassy, I think his strength is really in innovating AWS, right, and moving up the stack. As we talked about, it's not just the storage and compute; it's getting into database and data warehousing, analytics, machine learning, everything. And I think we're going to see that trajectory continue, because that's really how AWS becomes a much bigger business down the line, and goes from being 10% of the total Amazon to maybe even 20-30%, 5-10 years from now. But I think bringing that kind of innovation mentality to the rest of the Amazon organization is going to be really important. And that's where I see that happening, and B, I would expect to see AWS more deeply integrated with the rest of Amazon over time. That would not be a surprise to me, especially given some of the antitrust scrutiny that's out there, right? Having deeper integration is going to make it tougher for some of that, solutions of, hey, let's break up these organizations to come to bear.
Amy, I want to get your perspective on this, having really built companies and having the perspective of cloud before cloud was really a thing. What do you expect to see from Amazon now that they have promoted their head of cloud? What types of customer experiences might be different? What types of integrations, as Rishi mentioned, could we maybe see, if you could maybe hypothesize?
Sure. So, as I said in the beginning, the essence of cloud services is customer centricity and delivery of outcomes. And so the way that I would think about the opportunities as a customer, an end consumer, let's say, thinking about what could this mean for me, I would see an opportunity for a range of services that may be available to me that, under the Amazon umbrella, that may not have been available to consumers in the past. So one outcome might be a new set of services, maybe computer-based or computing-based services that might be delivered to customers. If I'm a supplier, a provider to Amazon, or within a marketplace, similarly thinking about how there may be a new range of services that are available to me, or services at a higher level. I think thinking about how to provide personalized, ongoing value be a key, aspect or driver of how you inject that type of ethos into the rest of the organizations. That's such core of the ethos of cloud and cloud computing. I think at the end of the day, the ability to provide customer-centric services at scale for a company that offers a range of products and services to a range of customers the way that Amazon does is really the challenge of the day. I think it's going to be really interesting to see that play out for sure.
I'm going to be facetious, but I mean, we know on the consumer side, it's all about Amazon Prime. You drive those subscription numbers up and you drive sales, because people who have an Amazon Prime account end up spending, 2x, 3x than anybody else. Is there a tie at all on this end, do you think? Or, is it really still going to be a separation of church and state?
So, yeah, I mean, one of the things that's at the core, again, of these cloud computing services, or at Amazon Prime, or Apple's subscription programs, if you may, is a subscriber ID, right? It's that I have a relationship with Amazon. They know who I am. They know what I've purchased. They know what I'm going to purchase. And for the most of the, at least for me personally, and I haven't seen the numbers to know, but a lot of the goods and services that I deal with through Amazon Prime are physical. Of course, there's the whole video and content distribution part of Amazon and Amazon Prime. Be interesting to see, how this ties together. I mean, there's just there are so many opportunities to deepen relationships, and I think this is what it's all about at the end of the day, is building relationships with individuals, deepening them, and then creating opportunities for providing more value in exchange, right? For subscriber retention, people who are keeping Prime, and for maybe expansion of new services that they might subscribe to above and beyond what they're already engaged with.
Rishi, how do you feel about this idea of this identity, subscriber identity type of relationship?
Yeah, no, I would agree with Amy. Like that is incredibly important, especially if you're a company that is in as spread out as Amazon or Microsoft or Google is, right? It's you don't treat them as separate organizations, right? There are, I mean, I bet, not that we have access to the numbers, but I bet there's a massive overlap between how many people are AWS customers that are also Prime customers for physical goods and also consuming Prime video content, right? There's probably a massive overlap there. And knowing who your customer is and making sure that you have that full customer journey from beginning to end within it is incredibly important. If you're Amazon, it's also incredibly important if you're a traditional brick and mortar retailer, right? Having that attachment, knowing that it's the same customer who went into your store physically, who browsed online, who went on their mobile phone and actually bought something. The more you know about who that customer is, you can trace that full journey and attach it to one ID, the more you are better able to target them, the better customers they are over time.
Right. And most people have their addresses right on Amazon. I mean, Amazon knows where you live, all the places that you live. I mean, I have all my past addresses in there. If I ever need to go back and fill out forms, that's where I go. I mean, it doesn't get more intimate than that. I want to open it up to the room. We have some questions that are coming in the chat. I want to bring that up. And while I'm looking through these, Rishi, something that just occurred to me, when you look at the top companies right now, at the top of the stock market, the FANG stocks, Microsoft doesn't fit in there with the M, but all of them really, cloud is number one. I mean, they're all cloud companies if you really think about it, with the exception of Apple and Facebook.
Yeah, and look, I love to use the acronym GANFAM because that does include Microsoft, and it seems silly if we're going to be talking about the biggest tech stocks in the world that we're excluding the second biggest one and Microsoft at close to 2 trillion market cap. But that's absolutely the case, right? And look, even to a certain extent, Apple and Facebook are delivering what they're doing as a service, right? You hear Apple increasingly focusing on their services businesses, which is much higher margin. Facebook, obviously itself is in some ways a SaaS platform. So everything is absolutely being delivered, as a service, and cloud is at the front and center of everything.
Okay, we've got a question here for Amy. Is Zora an ETF holding? What is it exactly? Basically, can investors invest in Zora if it is an ETF? And if so, what is the expense ratio? If you want to just recap what Zora is.
Yeah, so Zora is a cloud computing software company. So we're a software as a service company. We are publicly traded on the New York Stock Exchange. The symbol is ZUO.
And right now, obviously, Rishi is one of the folks who kind of looks at your news, your numbers. For those who, again, with the crowd that we have, who are not as familiar with kind of the relationship between the analysts on Wall Street and the companies themselves, can you maybe go into a little bit how that works?
Is this a question for Rishi or a question
for you?
So yeah, there are analysts that follow our stock actively. I used to do that in my previous life before I joined Zora. So I did a ton of research on Zora before I ultimately joined Zora. So the role of an analyst, which Rishi could say better, but the way that I think of it as for all of you that are listening that might be interested in a stock like Zora, that really want to talk to experts who are validating Zora from a third-party perspective, looking at the company. Like I said, we're a public company. We publish our financial results. You could available information, and you might talk with someone like Rishi or read his reports to really understand his perspective. How do we compare to other similar companies? Where are some areas where folks like Rishi would like to see us perform better or not? How do we compare against peers? So it's really helpful third-party expert validation. And we're, as a company like Zora, really excited for that, for analysts to take a look at us and to kind of share what we do with their customers and clients.
All right. And we have a question. Broadly speaking, how are you thinking about software valuations today, Rishi? I think this might be good for you. Is software priced for perfection, or are there pockets in the industry that have room to run?
Yeah, look, this is a question I kind of struggle with myself because I do pay a lot of attention to valuations. And the way that I think about it is a lot of companies are very much, priced for perfection or trading at what I would call, pretty egregious multiples. But the fact of the matter is software is, one sector that has tons of secular tailwinds. I think the pandemic has not only pulled forward business for a lot of these companies, but really expanded the market opportunity. And you can look at the third-party Gartners and IDCs of the world to back that up. And so I think the way I think about this when I talk to my clients is you really have to be critical of how big of a market opportunity is the company going after, right? Because that's how you ultimately justify the valuation multiple you can pay it for some of these, right? I think some of these big platforms like ServiceNow and Microsoft are going after massive market opportunities. Zoom is one of the most expensive stocks in all of software, but I think this is just such a massive market opportunity given we're heading into a hybrid work world, and the only way that can happen is with video conferencing technology that actually works. And you're not getting that from Cisco, you're going to get that from Zoom. And so I can underwrite those. I struggle to underwrite the valuations on stocks like Palantir or C3.ai, right? Both new to the public markets, because I just don't see the market opportunity for them. And so that's really where I think we have to think critically when it comes to valuations, is not just focus on what is the multiple, but really think how big is that market opportunity they're going after.
What are the industries that have been slower to adopt the cloud and could be underpenetrated by cloud SaaS providers? I think, Amy, you have some perspective on this as well. So either of you there.
Yeah, so back in the day when I used to be a cloud analyst, the industries that typically were slower to adopt cloud happened to be government as one example. One reason was privacy concerns back in the day. Financial services was another. Companies that have lots and lots of customization, supply chain or engineering design, CAD CAM software was a little bit slower to move to the cloud. Again, partially because of privacy and security concerns. If you're using the software to design a nuclear submarine, do you necessarily want to be accessing that over the cloud? However, I'd say over time, and this is, like I said, cloud and cloud computing has been around for decades at this point. I think, Rishi, you made the point, Salesforce was founded last century. Over time, a lot of those concerns have moved away. And so I think financial services, government, healthcare, these are some areas that, like I said, design, manufacturing, that were not quite as penetrated in the past, that certainly there's room for opportunity there. But the one thing I will say, I think you had both alluded to the quote, software eating the world. Software is inside almost everything today. And so even products that we would think of as hardware, chances are there's software in there as well. And so even software that isn't overtly sold as software might be sold as a solution that includes both a device and software. There's also cloud computing opportunities associated with that as well. So I think sneaky isn't necessarily the word, because I think it's more of a positive connotation from my view. But I think more than just simply selling code software, there are opportunities for cloud computing with things like airplane engines and other really physical good type opportunities.
I think that's a good way of putting it. Rishi, any last thoughts here on this?
Yeah, just on that, and I would agree with everything Amy's saying. But if we think about which industries are, slower to react, it tends to be, your oil and gas, energy. Government used to be a big laggard, but as Amy pointed out, I mean, that's been changing a lot over time. You think about construction, healthcare, right? Heavily regulated industries, manufacturing. Those tend to be the later adopters. Whereas, it's not just high tech, but financial services has been quick to move, and then industries that have been forced to digitize and modernize have actually moved to the cloud even faster. Retail is the biggest example for me, right? You would think about them as being slow to move, but they have no choice because of Amazon and the Shopifys of the world and the disruption from e-commerce to digitize and really migrate to the cloud quickly.
Amazing. Thank you both so much for your insights. I'm glad we had you on this very busy news day. Amy and Rishi, thank you guys. And this also concludes our Head in the Clouds investment theme-based chat with Public. Thank you to all of you who have been here and listened this whole hour or nearly an hour here. This Public Talks event is in partnership with Voices of Wall Street. I'm Hope King. This is the first of many. We look forward to seeing you again next time. Goodbye and take care.